XRP has had a good run to the upside in the last few days. And in today's video, I am going to be taking a look at the technical analysis on the 1 hour and 1 day time frame, sharing my thoughts and opinions as to where I think that price action is heading next. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new, subscribe, and let's take a look at what's going on with XRP. So here we have XRP paired up with USDT. We're on the 1 hour Binance chart here, and we did hit target yesterday. Okay, so our target range was coming in at 59.68 to 61.07. Okay, and again, we were talking a lot around Elliott wave theory in the last few videos, and this is actually a really clean example of Elliott wave theory. Okay, great impulsive run on this 1 hour time frame. If you roll this up into something like an 8 hour time frame, you can kind of see this really good run to the upside. Obviously the rejection right now, which is obviously part of the process, but really good, nice, clean run to the upside here. Okay, now we were talking about how this was unlikely to happen, as in it didn't feel right. Obviously, the Elliott wave theory told us that this was going to happen from the kind of premise of how traders are behaving, but it didn't feel right on this move to the upside, specifically with the fundamental side of what caused this initial pump, which was the grayscale news. So I was issuing a few warnings saying that there was a high probability that this doesn't quite play out as expected, but these are the scenarios. And well, I was wrong. It did actually play out according to Elliott wave theory. So, testament to Elliott wave theory in this one. But here we can see a bit of a move to the upside with our swing low coming in here at 55.41. The initial swing high being there on the 56.68. The pull to the downside didn't set a lower high. We did break up higher here. So that was going to be our tail, a bit of accumulation, bit of support being found here. And we could see that this is where we then started to get that nice clean break. We would have been looking for a long position up in and around this area on Friday, and we would have been looking to target out a little bit higher here, as well as this breakout situation also presented itself with a potential for a long opportunity. Okay, so as we can see here, if we didn't get into a long at this level, we could have got into a long at this level. Okay, and I'm going to show you what they would have looked like. So to start with, if we got into the long down here, we would have been looking for this initial break to the upside. We didn't see any confirmation. We did move down, no confirmation until we got to about here, but we had this retest. So there's a couple of different options you could have had. You could have entered long here, tight stop loss down lower than the previous swing low, targeted out 1.5 on the risk reward ratio, which would have been basically capturing this entire move to the upside. That was option one. Option two would have been that we saw this breakout here and we put the stop loss lower than this previous swing low, and we would have targeted out 1.5 on the risk reward ratio. And again, that would have been another take profit kind of situation. If you had missed those, there was an opportunity just up here as well. We obviously broke this level, we found resistance, we got closed candle above that area of the previous resistance, and then we got this additional one right in here as well, straight after. So that there would have been the position to go long. We would have looked for the tight stop loss and 1.5 on the risk reward ratio, and this one would not have actually hit profit just yet, and would still be potentially running. If you didn't have a trailing stop, you'd still be in it. Would be negative at the moment, so it'll be a very interesting one to keep a close eye on. So why do I think that this move to the upside hasn't yet finished? Well, if Elliott wave theory is telling us anything here, it's that we are actually in the wave 4 and we have the 5th wave still to go. Okay, so if we take a look at this, we have the 1, the 2, the 3, the 4, and then we're looking for that 5. Okay, that final 5th wave movement, assuming that we've kind of locally bottomed, which is possible that we haven't, we might still see a little bit of more volatility here with the wave 4. So I'm going to keep it conservative by snapping it to the existing wick, but just be prepared that maybe that's going to change a little bit. And this is a case of the lower that wave 4 goes, the higher that wave 5 will go. Okay, so in a roundabout way, you want to come down and retest the support levels of the 50 EMA, 50 SMA, which is very, very possible. And in doing so, then you're going to be pushing up into those higher ranges. But as it sits today, at the point of recording this video, we could be looking for 60.25 to 60.78. But if we do come down lower, then of course we're going to push for higher targets. And therefore it presents itself with the opportunity for some long positions right now as well. Okay, so again, we could go long here, stop loss lower than the previous swing, 50 EMA, 50 SMA, and of course targeting out 1.5 on the risk reward ratio into that target range right inside there. Okay, so you can see here that there's a few possible scenarios for finishing off this structure, but it is a finishing structure, and I want to stress that in today's video. specifically, I guess, as we kind of roll up into the large timeframes. But as I've been talking about these kind of trading positions, you guys know by now that if I am going to be trading leverage-based positions, shorts and longs, I am, of course, going to be using 𝗕𝗘𝗪𝗏 or 𝗕𝗏, which are my go-to platforms when it comes to leverage-based trades. If you haven't already checked them out, check them out, guys. They're linked in the description down below. If you use those links to sign up, you're eligible to some fantastic sign-up bonuses, depending on where you are around the world. And if you go for the Blowfin exchange, it's a non-KYC exchange, so you don't have to worry about verification and all of those kind of processes, whereas 𝗕𝗘𝗪𝗏 you do, but it depends whether or not you care about KYC or not. If you don't, I suggest signing up to both because it's better to have access to as many different exchanges as you possibly can, specifically when it comes to kind of bull market trading, spot trades and buying and selling actual physical assets as well as the contracted leverage-based trades. It's always great to have access to as many different platforms as you possibly can. Okay, so check them out if you haven't done so already. Like I say, they're my go-to platforms when it comes to trading because they're so easy to use and, in my opinion, really reasonable on the fee side as well. So for everything that we can kind of see going on here with XRP, we are tracking a very nice run. This run in itself is also just a part of a final fifth wave movement. We had the wave 4. This is the final fifth wave move. Now, what's really interesting about this is it is an impulsive breakout, but it does look strange. It looks very irregular. But again, this is all due to the fact that what happened in the wave 3 was, of course, fundamental driven. It was on the back of the Grayscale Trust news and wasn't really kind of just driven from normal trading behavior, which is what was giving me a little bit of the concerns with the depth of the wave 4, which is typically deeper than you would normally expect it to go. And because wave 4 went down this deep, wave 5 had to go as high as it did. Okay, so you can kind of see everything kind of playing out quite nicely. The other thing to kind of consider here is that all of this is a part of a much bigger corrective pattern that's going on for XRP at the moment, but we hope to maybe see some breakout situations at some point in the future. If we roll this up into a daily time frame, you can see that we've been talking about this bullish breakout towards 75 to 85 cents for what feels like a very long time at this stage. Now, as it sits today, we had a bit of a push up in yesterday's candle, right? We can see it here. Okay, it was a good move. We had a good close position once again. But again, today's candle isn't really giving us that confidence in the market just yet. Our stochastic RSI is also not in the best position on the daily time frame. Although I do suspect there's still a bit more of a push to the upside on the smaller time frames, we don't see the kind of strength in the market that we need to on the daily time frame. So we are a little bit cautious here. Obviously, 75 to 85 cents, we'd love it to happen, today, tomorrow. But the closer and closer that we get to the 18th of September, where we have the Federal Reserve interest rate decision, that is going to affect the markets. And I think it's going to be affected negatively. So I'm not suspecting that we're going to see positivity after the 18th of September. So that only gives us a few more days, and I don't think we're going to rally up to 75 to 85 cents in the next couple of days. Therefore, my kind of expectations are that we do move down, and we are going to break down from the structure that we find ourselves in. So we finish off that fifth wave movement on the smaller time frames, maybe today, tomorrow, and then we start calling off. And we probably will be looking at retesting the 50-cent level and maybe even dropping down lower than that briefly before we get into that next big run for 75 to 85 cents. As I've said before, and I'll say it again, this pattern will remain valid unless, of course, we drop down lower than 38.23 cents. And unless we drop down lower than 43.19, our target remains the same. Okay, so we always target out 75 to 85 cents unless we drop down lower than 43.19. And if by dropping down lower than 43.19, all we're going to do is lower the target from 75 cents to, let's say, 70 cents, for example, right? Losing the 38.23 breaks the structure altogether and prevents us from moving up to 75 to 85 cents under this particular pattern that I've drawn out here on the chart. So understanding where the key levels are for failure are going to be really important, specifically over the next week, in my opinion. Of course, we do have the potential of this trend line looking like it gets broken, but trend lines are so subjective, I don't rely too heavily on them. If we were to take into consideration maybe closed positions of our kind of candles as they sit today, you may argue that actually we haven't done anything noteworthy whatsoever, and all we're doing is hitting resistance on that level where you can see previous resistances coming in right on that trend line. Okay, so trend lines are really subjective to how they've been drawn. I've kind of spoken about this a number of different times. We don't generally like to use trend lines too much, but they do show us a good visual of what's going on in the market in terms of higher highs or higher lows and things like that. In this particular pattern here is a continuation pattern. Normally it will continue the pattern that led into it. It does depend on where that continuation pattern started. For example, we've drawn this from down here on the 5th of July, but if the continuation pattern was actually starting up on the 31st of July, well, that would actually mean that we are likely to see that dump in the market, taking us back down towards the 38.23 cents. So hopefully I'm right about how I've drawn this at the moment. If I'm wrong, it could obviously mean that we're going to lose some of these key levels of support for XRP's price action in the coming weeks, but hopefully that is not the case. So for XRP, we are looking okay. If I zoom out of this and we just take into consideration the bigger, broader market, because I know a lot of people aren't that interested in the smaller movements, we're just here for the macro stuff. There is that one bearish case still outstanding, which is the idea that moving back down towards the 28 to 33 cent level, as you can see here, even hitting 75 to 85 cents doesn't break that. The only way to break that model is to go up higher than 93.8, okay, which obviously is what we saw with the previous three-wave structure that we were plotting back in 2022 and early 2023. Okay, so we hit that one on the nose. We're looking for this bearish move here, and we're hopeful because we have met minimum expectations that we're done and we don't have to continue moving down. But if we see complete failure here within that pattern that I've drawn, then ultimately, yeah, we are going to be looking at targeting down quite aggressively here. Specifically, if we lose that kind of 38 cent level, we could be looking at a pretty interesting drop for the price action of XRP. Okay, there's still a lot going on from the SEC Ripple side as well, so lots of uncertainty in the air around appeals, and I know a lot of people say that they're not going to appeal. I think it's a case of I don't see why they wouldn't, and I think that's kind of what we've seen as well with the escrow for the penalty sums being agreed by Ripple and with SEC from a fundamental point of view. In the latest news, we know that the only reason to have an escrow is that preparing for appeals. So I know there's the idea that there's no appeals happening, but I suspect actually an appeal will happen, and it seems a bit of a no-brainer. Otherwise, I just don't see why it's dragged on the way that it has at this stage. But again, like I say many times before, and I'll say it again, I would love to be wrong about all of that. I just suspect the worst case scenarios. We are looking for $1.04 to be a key breakout area on XRP. If we can hit that, that's going to be great. And of course, we still do think there's the high probability of $5 to $12 in that next, or well, $5 to $11 in that next bullish market of 2025. So everything's kind of still on track when it comes to XRP's price action. But let me know what your thoughts are on all of this in the comments down below. Where do you sit for XRP's price on the kind of bigger macro picture? Drop them in the comments down below, or join us in our free Discord server. We would love to hear from you. If you found today's video useful and informative, smash the like button. If you're new, subscribe. And if you haven't done so already, check this video out right here. It's not one you're going to want to miss.